there, my name is Jonathan Baumgart. I'm the CEO of Atomiq Consulting. In today's video, I want to discuss the recent news pertaining to Saudi Arabia and their decision to end the so-called petrodollar deal. So let's get started. Okay, so before we begin, I want to mention that this topic came from a subscriber. So I would encourage you, if you have questions, if you have feedback or would like me to make a video on a certain topic, please do so. Of course, it has to be related to, let's say, macroeconomics and finance. I may not always have the bandwidth to do every request, but I'm always open to them. Now, before we begin, I wanted to mention that that video was focusing on BRICS, and it's also related to this topic here. So I would like to briefly explain what BRICS is, and you will shortly see how it is related to the subject of this video. So BRICS refers to an informal union of not just these countries, but it stands for Brazil, Russia, India, China, South Africa. There are actually more members. The idea behind BRICS is to form a currency union that would compete with the US dollar. Now, I won't go into all the subjects of my video. I will link it. But the idea is that the dollar is falling out in terms of relevance in the world. It will soon no longer become the dominant currency. The short of it is I disagree with this. You can find in the video the reasons why. And you'll shortly see how it relates here to this subject. So with that out of the way, I now want to provide my thoughts on this recent news event. So my quick take on this is that there's much ado about nothing. I do not think this decision will have any impact on oil, the dollar, or anything else. But I would like to provide a detailed analysis and answer as to why. So let's get started with what actually this is all about. So basically, in the mid-70s, 1974 to be exact, there was a kind of deal that took place between the United States and Saudi Arabia that created what one could call the petrodollar. Now, one has to understand a little bit of history. There were a lot of difficulties during this period, and some of it mirrors what we have going on today. There was a lot of fighting going on in the Middle East at the time, and inflation was an issue. In addition, the United States had problems with getting enough oil into the country, and this period was famous for people waiting in line for gas, outrageous prices. As a result, the United States wanted to fix this problem from happening in the future. So what they did is they entered an agreement with Saudi Arabia in order to further their cooperation. And it was mutually beneficial, and I think it's one of the great examples of modern day international business where both parties benefit. Now, the misunderstanding here is that there was an exclusivity with the US dollar being the only currency that Saudi Arabia would conduct business in. This is false. There's absolutely no evidence that backs up this claim. Furthermore, one can see throughout history that Saudi Arabia has always sold oil in other currencies. But for some reason, people think that that was the deal. No. The part that actually wasn't revealed until 2016 is that Saudi Arabia actually entered into deep cooperation with the United States. Because Saudi Arabia was selling so much oil to the United States, the government had an influx of dollars, and they didn't know what to do with them. So a lot of that money actually went back into the system. It went back into the US via treasuries and also other purchases. This was kept secret for many years. I guess you can understand why, for political reasons, etc. That is the only conspiracy, that in 2016 it was revealed that there was deeper cooperation. But that's great. Both parties benefit, and I think those kind of alliances are good from an economic standpoint. I don't like to get into the politics here. So this was the main idea behind this was cooperation. And the recent news is that this deal has more or less ended or ceased. But it never was any kind of deal stuck on the dollar to begin with, okay? That's why it's really not that big of a deal. But in any case, I now want to provide evidence as to why this really will have no impact on the markets or the dollar. So the first argument I will make as to why this won't impact anything is that the real, the currency that is used in Saudi Arabia, like many currencies in the Middle East, is pegged to the US dollar. Why is this the case? Well, a lot of it has to do with oil. See, if Saudi Arabia were to have a free-floating currency, that could really disrupt their country's business. When a currency floats, it's subject to manipulation. Now, my background in currency trading shows it's almost impossible to manipulate currencies like the euro. You can't manipulate the US dollar because it's just too big. Smaller currencies can be manipulated, and this is the fear that Saudi Arabia is not a massive country like the Eurozone or like the United States. It is subject to manipulation, and the last thing that you want is speculators are messing around with the price of your currency when you're trying to sell oil. Why is that a problem? Well, depending on what the speculators do, you may receive less revenue than you otherwise would have. And that's just not from speculation. What if the dollar becomes strong? What if the dollar becomes weak? It's very risky putting the speculation aside because no one can really predict what happens in currency markets. Japan is a good example. Because Japan is an export-oriented country, they constantly intervene in the market to weaken the yen. And even then, they're often unsuccessful. It's very risky to try. But you can see with the example of Japan, what Saudi Arabia and other countries that are net exporters of maybe a single commodity wish to avoid, which is essentially first the risk of speculation and just the overall fluctuations of currencies and markets that could impact their revenue. It's just much easier. If you peg your currency to the dollar, you can then project the revenue based on oil output and the price of oil. And that's the other thing, that the price of oil fluctuates all the time. I mean, let's go back to COVID. It was insane, but for a little bit, oil costs nothing. So then you have double the problem. If you have a floating currency, you have to worry about the value of the currency and then the value of oil. It's just too much. I think it's too much, for a group like OPEC to handle. So why is this so important? Well, if the real is pegged to the dollar, then this whole agreement ending doesn't matter because the price of the real won't change and it's still very much dollar dependent, okay? I've alluded to the second point, but I want to repeat this second point again. Saudi Arabia has always accepted payment in other currencies. Now I want to discuss this more. Why is the dollar so dominant? Or why is the dollar, better said, why is the dollar just chosen? Well, it's just easier. I mean, if you're, let's say, a smaller country, let's say, in Africa, do you really want to maintain reserves of 10 or 13 different currencies? No. If you want to buy oil, for example, if you're not an exporter, and let's say Africa just as an example, it's just easier to have dollars in your reserves and use those to buy oil. Imagine if Saudi Arabia only accepted British pounds or Russian rubles or something, then you have to constantly maintain a reserve of these other currencies. You have to pay attention to the exchange rate. The central bank will have a lot of work. It's just the dollar is the dominant currency. It's just easier. Now, Saudi Arabia is happy to sell in other currencies. They maintain their own reserves, but most of their buyers just conduct in US dollar. It's just simpler, easier to use. So that's why, which I'll get to in a moment, there really is no impact from this decision. Finally, there's speculation that Saudi Arabia may start taking oil in Chinese yuan, and that this is a threat to dollar. Well, like I mentioned previously, if this were to happen, it really wouldn't have an impact on the dollar, on oil prices. I'm going to get to that in a moment. But the final point is Saudi Arabia has already been accepting different currencies for payment for quite a long time. So the conclusion here is that this is kind of a big nothing burger, for lack of a better term. It really has no impact, but I want to show you the proof, so this is more than just opinion. So when it comes to these macroeconomic subjects, one has to be careful. There is a lot of information floating around the internet mentioning that the dollar is doomed, the dollar is weak, and a lot of times people mix up economics. It is true that there is a huge debt in the United States and that the Fed continues to print money and that the dollar inside America is being debased, meaning as more and more dollars are printed, the value of the dollar relative to where it was goes down. But that has no impact globally on other currencies coming about. These are two different things. So if more and more dollars are printed in America, yeah, you have inflation. Everyone has seen that in the last couple of years, that you need more and more dollars to get the same goods and services. That domestic issue is not related to the US dollar as a global reserve currency or the dominant currency around the world. They're simply not related. If the Fed is printing more and more dollars, like I mentioned, Saudi Arabia is primarily going to accept oil payments still in dollars. It doesn't make a difference. They're not connected. But when I form this opinion and state that this whole petrodollar issue doesn't really impact anything, first, I want you to understand this is not just my opinion. I will link to several articles that you can read by economists and other experts who agree with me. So this is not just a lone opinion. And I would caution you, whenever you hear someone commenting and saying, well, everyone is saying this, but I'm the only one, consensus on these subjects is generally the way you want to go. And I have proof for that. Additionally, before I get to that proof, there's a great trader I follow. I'm not getting anything by promoting him or anything else. I'm just going to link to his video where he comments on this. So it's someone else who's also in my background who has the same opinion I do. It's called the Kendall Report. I just like to share it. If you're a trader, I think it's a pretty good system. I personally don't use the system. He's one among many type of market analysts I like to follow and listen to get kind of a balanced outlook on the market. In any case, let's put my opinion aside. I can prove to you that this has no impact. The best proof is let's look at the dollar's performance since this was announced. So if you look at the dollar's performance over the past 2 years, it's been quite strong. And the dollar is really crushing it in terms of the markets. Ever since around early 2022 with the outbreak of the Ukraine full-scale invasion, the dollar really became a flight to safety. If you look, it's now had a slight dip, but if you look at, let's say, Euro USD, trading at 110 or 111 historically is quite low. If you were to average it out, Euro USD since inception around 20 years ago or so, average is around 120, so it's still lower than, I'm not saying it should be, but historically speaking, euro dollar is lower. Same with the pound. When I began my career, I remember seeing the pound almost hit 2. Now it's at 130 to the dollar. So dollar is quite strong. In the last months, it's had a dip, but that's not related to this at all. It's just, I would say the dollar probably at that point was overbought. There was a little bit of unwind with the Japanese carry trade that I think contributed a little bit to dollar sell-off, especially after that event. Dollar sell-off is also a bit of a more of a risk-on type of thing. But in the whole scheme of things, since this announcement was made, the dollar has had no impact. It just has not weakened significantly against these currencies. If it were, you would see, what would make me say that this did have an impact or the dollar is getting replaced? I'd want to see euro dollar at 2 or pound dollar approaching 2. It's they are nowhere near this. The only unwind was dollar Japanese yen, which is its own kind of beast, and it's related more to the yen strengthening versus the dollar weakening due to a historical interest rate change. Furthermore, let's look at oil. The price of oil just keeps dropping. So oil has been very bearish for most of the year. You would think this would have some kind of impact if it were to be the case. I think it's very cyclical. I think the change in oil has to do with the lack of demand. It seems in the economy there's issues happening. My whole point is none of this has to do with the petrodollar. I cannot see any evidence Feel free in the comments to provide any evidence you might have that somehow this has had an impact, but I would imagine maybe that would be bullish for oil. I don't know what the bull case would be. It's hard for me to understand. I can just say as far as the dollar goes, I don't see any evidence that this has done anything material to weaken the dollar. I would actually say that the dollar continues to be strong based on those levels I mentioned. That it's just very strong still from historical standpoints. So that's my take on this. Of course, just my opinion, but I do back it with evidence, with 2 articles and also a thought leader. So, you want to consider those points. And I wish to thank you for checking out this video. Like I mentioned in the beginning, if you did have suggestions for other videos, thoughts, or feedback, feel free to provide it. If you like this content, make sure to subscribe. And I will continue to put out more videos on this kind of macroeconomic theme. So stay tuned, and we'll talk to you soon. Bye.